think we're live. Let me check. Let me check. Let me check. Um, how's the audio? Think we're live. Oh, there you go. Let me check. All right. All right. So you guys can leave me comments on the chat box if you're here. I'm gonna be reading those. So I'm here to show you how to trade, how to get a trade on gold every hour, basically. And obviously I'm using the ICT 2024 model with the 2022 model, and then I'm incorporating the macros so that I can be able to determine a short-term draw, and so that I can also be able to identify a market structure shift. So basically here the goal is to be, you need to be able to understand what market structure is, and then you also understand to what is the draw on liquidity is at the right time of the day. So you are looking for market structure shifts inside the macros, and then you identify draw smooth lows, smooth highs. The market is most likely, and also I use the inversion fair value gap. So here I'm going to show you a couple of trades that I took today on gold, and I'm not going to show you every macro that I did not take trades. I don't take trades like with all the macros that are there. I need to have something that's that's gonna give me something that's tradable. I don't want to be trading for the sake of trading the macro. So I like the ones that are inside the kill zones, because those ones are backed by the volatility that's in the market at the time. Most traders, retail traders, would refer to that as volume. So that's what I like to position myself with, to have that as backup, rather as an underlying factor, because I know I won't be stuck in a trade for like longer periods of for a longer period. I just have something that's gonna run quickly to my target. So I'm gonna be showing you what I look at, and I'm only using this is like a 1 minute chart. Yes, I do have the luxury of operating the 30 seconds chart too, but that's after confirming what I want to know or what I want to see on the 1 minute. When the deal is sealed on the 1 minute, then I can, you know, go to that 30 seconds chart, 15 seconds chart to look for a fair value gap, because that's what I like to use for my entry mechanism. So let's get down to it. Okay. So I gave I almost said I gave my kids, I gave my students homework to show me some of the trades that they would have, you know, that they could see during the macro, and show me where they were going to put their stop loss, where they were going to enter the position, where they were going to take profit, So I'm just teaching them how to scalp their way up to profitability and to being a millionaire, or to being a millionaire. Sorry about that. So this is a 150 to 210 macro. I told them they should start here, but I'm not gonna show them the setup here. I think this one is more advanced because it requires a correlated asset, which gave an SMT here. It created a lower low, sweeping this low, and it was just soon after the macro. So this macro here, we swept the low here, bullish market structure shift here. This macro repriced and cleared rejection blocks there. And once it inverted this fair value gap right there, then you would have bought that retracement, stop loss below that low. And then boom, you're targeting the highs right there. And inside this macro, what do? You see it retraces back down to this range here, and then it breaks higher. When it breaks higher, okay, something is happening. I don't know what's happening here. Okay, sorry about that. When it breaks higher like that, it creates a bullish order block. This is a down close candle. On retracement, you can wait for more confirmation higher to buy. You're still inside the macro, so it's what, digging deeper inside here, clearing sell side right there, and just reclaiming this and filling that inversion fair value gap. And then after that, there was a beautiful scalp to take it higher, provided you have a clear draw on your left to the upside here. Okay, but I'm just showing them what I want to see and where they're going to entertain or take a position on the macros. But here I'm just here to show my entries. And if you follow me on Instagram, obviously you've seen some of the positions I posted on the Instagram. So I'm just showing you guys what I was, looking at and seeing in price action. So when I enter the market or when I'm about to trade, I look at who's making money already, and I want to trade against those people because I know the smart money guys will be targeting those people as soon as the session or the any session begins, basically. So these guys are the ones that are making money. So they've generated what, sell side liquidity, right? Because they are trailing stop losses as the market goes higher and higher. So when I'm here looking for a trade inside the 550 macro, what obviously I'm going to be looking at, I want to see like some sort of bearish market structure shift after a buy side raid. I'm looking at this high, and that high as a three drivers pattern going all the way up, and it's during the 550 to 610 macro. This is an Indian strive, okay? This is an Indian, when we take buy side three times like that, and then we break above uh, the swing low or the short term low, that the low of the high that took buy side. Once we break with displacement below that, I want to engage that fair value gap, and that's what I did. And then I'm going to target the clean lows. So we have relative equal lows here, smooth lows. This is my draw. So this is a market structure up here, and this is my draw inside the macro. And if you look at this time now, it's 650 to 710, and I'm being backed by the volatility that usually comes in during this time, the macro times. Okay, after this macro here, we invert this fair value gap right there. When we do that on retracement, I'm taking it higher because now I'm viewing these highs as what, smooth highs, and that's what I did. So I took a sell here, I took a buy here. Now I'm going to remove this because of that, mainly that I'm trading the macros. And during because 7 o'clock, the pre-market begins, and then I want to look at, okay, we created a low. Yes, the low took out this sell side liquidity. So I'm not yet looking to trade and um, come down to this low. I'm waiting for signatures in price. If the market shows me that it's willing during the macro here to go towards this low, then I'm ready to take it lower. For 750 to 810, I'm just watching, and already I'm inside the macro, but we have a bullish breaker here. We've just broken above this bullish breaker with displacement. So yes, this is a bearish market structure shift below this swing low, but why did I not take it? Here's my reason. We still have a bullish breaker that we haven't yet violated. So until this bullish breaker we've violated it completely close below that, then I can find something, a clean fair value gap to take it towards this low during this macro. But I was not able to do that because it respected the breaker. So a close below this bullish breaker here could have caused me to sell, yes, but I did not sell this. I was not liquidity here when this happened. And as soon as I saw a bearish market structure shift now, inside that fair value gap, this is actually the trade that I missed up here because I was watching, okay. We did not spend so much time above the highs here. So this is a purge, obviously. You see suddenly a bearish market structure shift. I knew that it's during the macro, it's gonna run. I couldn't get inside that fair value gap. So it created what, smooth lows, generated relative equal lows, because at 8:30 I thought we are just gonna go straight to the downside. And also I'm now using the midnight open as my drawn liquidity for the session, because now I'm trading the New York session. London has been bullish. It went all the way up. So the guys are still in profit. People that bought down, they're still in profit. So we're still targeting those guys, and we also have sell side close to what, midnight open. So midnight open is the opening price at 12 o'clock New York time. Everything is in New York time. So everything is in New York time because the algorithm, this is the algorithm. This is not buying and selling pressure, okay? This is the algo. doing its thing. So this is how I've mastered this shit. All right. So I see this guy is asking me the indicator. I'm gonna show you guys the indicator. The indicator is called macro tracker by 2 degrees, and you can just because yes, many people have been asking me about an indicator. I finally found the one that's that's like that's the one that I can use. But mainly I just look at the time down here like 10 to every 10 to 10 past there's a macro, so you don't really need an indicator for that. You can just time it. I know that because my eyes are always down here and also down here, but this indicator will help you a lot if you're still a beginner. So you can just search it. It's called macro tracker by 2 degrees, and you can just use it's free. All right. And then since I couldn't get in on this, it created what now we broke about below with this bearish breaker, right? So now I'm looking for sales. I know it's going to retrace to that fair value gap to the upside there. Why? Gold leaves no gap unfilled most of the time. Okay, you don't want to be chasing it, chasing because you're going to be liquidity, my friend. You'll be selling down here when it's going to retrace all the way up there, and your stop loss will be hit. So if it's not only two fair value gaps breaking structure, if it's like a bunch of them, then you want to take the one that's up there. So I sold before it could enter the fair value gap. When I saw, because I was waiting, patiently waiting for it to enter the fair value gap here. But it's sometimes you find that on your broker, it did not, it won't fill the fair value gap. So when it's like a tick away from it, I just execute because some brokers you find that it's not gonna fill the fair value gap. But on some brokers, yes, it might, you find that it will fill some fair value gaps. So as soon as this happened, after this is a bearish market structure shift after this purge here, remember the people that are looking at this, we fade the retail stuff. So this looks what? This is like this is a bullish flag, right? This is a bullish, there's something called it's a bull flag. I think I don't I don't recall if it's a bull flag or what, but it's a bull. There's a pattern that these guys trade. It's basically something like this. If they see an impulse to the upside like that and then consolidation like this, they anticipate the same level or the same length of this thing to expand to the outside like that. So once we see those the retail stuff, retail knowledge, and it's during the macro, you see that's a bearish market structure shift right there. To me, it's a fucking proper setup. It's gonna be a banger, and that's why it was so quick to melt. But it left these lows at as soon as we opened at 8:30 to retrace to that so that we can finally drop because it's creating what smooth lows. So it's creating my draw on liquidity. When it did this and it retraced to the upside, I was confident to throw a two lot up here. So you can see on my stories on Instagram right now, I have a two lot that I executed right here. Why? Because it was now 8:50 to 9:10. It was searching for liquidity here. You can actually time the turtle soups, okay, with this thing here. And on we also swapped that high right there because on 30 seconds, let me see, it's gonna take me back. On 30 seconds, I'm gonna show you how that thing looked like. It also looked like relative uh, equal highs right there. So we had these relative equal highs. Yes, we did have this bearish market structure shift. I also threw in a trade here, but I did not put my stop loss above this high. It was just I just put it up there because I knew that yes, we have these relative equal highs and we are still inside the macro. Before we can run, gold will want to clear them because it's a given. It's a draw. Relative equal highs are made to be juggled before the run to the downside. And I was now in profit when it made this run to the downside. And obviously this was my target. So I offloaded most of my positions here before we could make it to midnight open, which was my draw. The draw is not a destination, guys. You need to understand that. The draw is not a destination. If you want to grow your account, you should look, or you should just focus on reaching new equity highs, not reaching your draw on liquidity, all right? Because in most cases, look at this. Imagine holding, you're floating 2,000 US dollars, 2.3 US dollars down here. Maybe down here you're floating maybe almost 4,000 US dollars, and then this retraces. Imagine that. Look at how long it stayed above, even retracing and breaking this high. You would even lose the fact, I mean, you would even lose focus here to say, oh, okay, this is the macro lead. It's a build up for the macro, because these are also relative equal highs, and we're just purging them. Now you're creating bearish market structure shift for this macro now to deliver midnight open. You end up losing focus. You end up, because you're not focused on the money that you would have made if you took if you killed your trade down here, but you waited and it did not deliver. So it's good to just, because the macro is going to deliver quick price action, or just a quick movement from your draw. I mean, from your from your initial market structure shift to your draw. It's going to be quick, but outside the macro, because you can look here, outside the macro, it might retrace and cause those movements to build up for the next one to deliver again. Do you understand? Same thing happened here, and then this macro was just a retracement. So another thing, because I'm not gonna cover everything on one video, but it's just, it's like you can do this, and you can literally, because now I'm thinking next year I want to make $1 million US trading gold, and I think now I'm ready. I'm more ready than ever. So maybe you guys, everyone that's here, if you're part of the, if you're already on my Discord, I might give you guys a free entry to that bootcamp. But if you're not here today, and if you're not already part of my Discord by the end of this year, you are gonna have to pay me a fee. Maybe you'll be flipping like $100 to $1 million US dollars. Who knows? So that's what I've been sharing. And I also took this macro here. This macro, I sold this fair value gap, but I did not bank anything here. I was trailed out because I thought it was gonna come for these relative equal lows here. I thought it was gonna come for these relative equal lows. And actually someone forced me to look for a setup, because I don't trade around this time. Yeah. I stopped trading after 12, then I'm done. 12 is like the latest for me, but latest actually is 11:10. That's when I'm done with gold by then. So thank you for tuning in, guys. If you've got any questions, I think it's time for me to take those. But if you don't have any questions, obviously you're gonna have to rewatch the video, and you can just throw me, you can ask me the questions on the comments here. Then maybe I'll cover them when on our next live stream, obviously. But that's it for me, guys. If you've got any questions, you can ask them now. If you don't, then I think that's it from me. So I'll see you guys tomorrow. I'll see you guys tomorrow. If you don't have any questions. If you don't have any questions. So I'm just gonna wait for you. I see people are joining the Discord. So yes, yeah. Obviously, you are going to incorporate the new week opening, the new day opening gaps, new week opening gaps. Obviously, I do those things, bro. I do those things. But this was just to teach you the entry models and what to look for in price action, not to complicate everything and include everything on one video, But yes, those are very important. I don't use the first presented fair value gap for gold. I use it on Nasdaq because Nasdaq has electronical trading hours and regular trading hours on futures. I don't know about gold, but I don't think gold, because gold does not open. Gold is electronically, I think it's ETH only, I think. So I see you, Rob. But yeah, this is actually ICT 2024 concept, the smooth lows and the smooth highs. That's what it's teaching on this 2024 mentorship. So I'm just incorporating what I know, what I've already knew, and what the guy is teaching already. So yeah, I think that's it on our live stream today. This is just a recap, obviously. So yeah, I'll see you guys on the next one. Cheers.